Have you noticed how the money in your bank account seems to buy less and less with every passing month, while the mainstream media constantly tells you that the economy is doing just fine? What if I told you that while ordinary people are busy worrying about paying their rent and putting food on the table, the wealthiest individuals on the planet and the biggest financial institutions are quietly executing one of the most massive wealth transfers in modern history? They are not chasing the overhyped tech stocks or the latest crypto fads that financial influencers are desperately trying to sell to you. Instead, they are aggressively hoarding gold, and they are placing billions of dollars in bets that the price of this ancient metal is going to explode to levels that sound absolutely insane to the average person right now. We are talking about price targets of $5,000, $6,000, or even over $7,000 an ounce. This is not a coincidence, and it is not a random market fluctuation. It is a calculated survival move by the smart money. Stick with me until the very end of this video, because I am going to expose exactly why the global elite are rushing into gold, the deadly financial trap that the middle class is blindly walking right into. And most importantly, I am going to give you a clear and practical 3-step survival strategy to protect your hard-earned money before this economic trap snaps shut forever. To understand what is truly happening, we have to look past the daily noise of the stock market and look at the deep structural shifts in the global economy. Right now, the middle class is caught in a devastating trap called the illusion of fiat currency. You are taught to work hard, save your cash in a bank account, and wait for retirement. But what you are not told is that the cash in your account is melting like an ice cube in the summer sun. Let me explain the domino effect of this trap. When global uncertainties rise and governments run massive deficits, they have only one real solution, which is to print more money. When they print more money, the value of every dollar, euro, or yen you hold drops. This directly impacts the cost of energy. When oil and gas prices spike, the cost to transport goods skyrockets. Suddenly, the flour used to make your daily bread costs more to ship. The bakery owner has to pay more for electricity and raw materials. To avoid bankruptcy, they pass those costs directly onto you. Your salary has not increased, but your groceries, your rent, and your basic living expenses have surged. Your purchasing power is being secretly stolen from you every single day. The trap is believing that sitting in cash is safe, when in reality, holding cash long-term is a guaranteed loss in a system designed to devalue it. While the masses are losing their purchasing power, Wall Street is making shocking predictions about the future of gold. Major investment banks are not just guessing, they are building their forecasts on incredibly solid, long-term foundations. Top analysts at Goldman Sachs have sent a very firm message to the investment world, stating that the foundational strength of gold is firmer than ever before. Even amidst market turbulence, they maintain a highly confident target of $5,400 an ounce. But here is the most fascinating part of the current market picture. That target from Goldman Sachs is actually considered the most conservative estimate on Wall Street right now. Other massive financial institutions are sketching out scenarios that are far more explosive. Deutsche Bank is confidently aiming for $6,000. JP Morgan goes a bit higher, projecting $6,300. Meanwhile, the research division at the Swiss banking giant UBS has laid out a base scenario of $6,200, and their most optimistic projection pushes the price all the way up to an astonishing $7,200 an ounce. The core argument behind these massive numbers revolves around a specific type of investor. We are not talking about day traders who panic sell when the market dips. We are talking about long-term investors who are buying gold to hedge against fundamental macroeconomic risks that have no clear end in sight. Their positions are incredibly sticky. They do not care about short-term price drops because they are playing a decades-long game. Goldman Sachs points out 3 giant pillars that are currently holding up and driving the price of gold. The very first pillar is the relentless buying from central banks in emerging markets. These nations are expected to vacuum up thousands of tons of gold to diversify their national reserves away from traditional fiat currencies. They are silently building massive financial fortresses. The second pillar driving this gold rush is the massive flood of capital pouring into Western gold exchange-traded funds. Institutional investors are pulling their money out of risky assets and seeking the safety of precious metals. But the third, and perhaps most telling pillar, is what experts call the currency debasement trade, initiated by the ultra-rich. The wealthiest families on Earth are taking structural positions, not short-term tactical bets, against the declining value of paper money. They understand that governments will inevitably continue to devalue currencies to manage unpayable national debts. This relentless buying creates an extremely solid floor for gold prices. The difference in the wild price predictions from various banks simply comes down to how much new money they believe will migrate from the stock and bond markets directly into gold. Strategists emphasize that the broader market is actually still underallocated in gold. And as global instability grows, investors are going to be desperately hungry to build a more diversified portfolio. There is also a profound shift in how the power of gold is being redefined in terms of absolute liquidity. Recently, some people panicked when they heard news that a few countries were actually selling off some of their gold reserves. Weak hands immediately assumed the gold bull run was over. However, industry experts quickly pointed out that this is not a bearish signal at all. In fact, it proves the absolute ultimate power of gold. When a nation faces severe currency pressure, skyrocketing energy costs, and a plunging local currency, they need immediate, unquestionable liquidity. They cannot pay international debts with printed paper that nobody wants. Gold is the only asset that can be instantly converted into cash anywhere in the world while retaining its true value. Selling gold to solve an urgent economic crisis is not a sign of weakness. It is the exact reason gold exists in a national reserve. It is not just a silent safe haven. It is a highly liquid life raft. Financial experts agree that gold has officially transitioned from being a secondary defensive asset to an absolute mega-yin-tori core asset for both the ultra-rich and massive institutions. The loss of faith in traditional monetary policies is birthing a brand new golden era. Now that you understand the massive macroeconomic game being played by the elite, you cannot just sit there and do nothing. You need to take action right now to protect yourself from the currency debasement that is destroying the middle class. Here is your 3-step survival strategy. Step number 1 is to aggressively audit your cash positions. Stop treating cash in a savings account as a long-term investment. You must keep a robust emergency fund covering 3 to 6 months of living expenses in absolute liquid cash to survive sudden shocks. But every single dollar beyond that emergency fund is melting. You need to stop the bleeding by shifting your mindset from saving cash to acquiring assets. Step number 2 is to fortify your primary income stream. In a highly inflationary and unstable environment, your absolute best defense is your ability to generate income. Do not rely on speculative investments to save you. Focus on your career or your business. Upgrade your skills, make yourself completely irreplaceable to your employer or your clients, and secure your cash flow. If you lose your income in a high inflation environment, no amount of investing will save you. Step number 3 is to start dollar cost averaging into hard foundational assets. You do not need to be a billionaire to play this game. Do not dump all your life savings into gold or any single asset all at once out of panic. Instead, allocate a set percentage of your monthly income to consistently buy into real assets. Whether that is physical gold, real estate investment trusts, or broad market index funds, the goal is to consistently convert your melting paper money into assets that hold their purchasing power over time. Act like your own central bank and slowly build your own personal reserve. The game being played with gold right now is far from over, and the depth of demand proves that it remains one of the most compelling investments in a world defined by uncertainty and risk. The institutions are preparing for the worst while hoping for the best. Are you doing the same? I want to hear from you. What do you think is the real hidden reason that central banks around the world are hoarding so much gold at this very moment? Drop your theories and thoughts in the comments down below because I read every single one of them. And if this video helped you see through the financial matrix and understand the real game being played with your money, make sure you hit that subscribe button right now so you never miss another deep dive into the strategies you need to build and protect your wealth.